Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube in the Bookmap Discord Trader Lab community? Can I please get a screen and audio check in Discord community and YouTube? Okay, thanks, Glitch. All right, how about Discord? Appreciate a response from Trader Lab, guys. Otherwise, I'm losing time here. Okay, thanks, Marty. Okay, great. Thanks, everybody. Appreciate it. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. This is based on integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis in the intraday developing time frame. In addition, this stream is about the business of trading, the building careers. It's based on structured trades. These trades are available to everyone in the Bookmap Discord Trader Lab community. There's no cost to visit and become part of this community. Not only is it structured trades, but it's understanding how the market works, why it does what it does, and how at times you might get in alignment with it using statistics to generate a tangible edge versus making it up as you go or being controlled by your emotional state. So let's get into the market today. We got a lot to talk about. There were a lot of interesting trades today in the Bookmap Discord Trader Lab community. You're all welcome to visit. And I'm going to show you a couple levels so you understand what we're doing, which I think is kind of useful, don't you think? Now, what should be? This is called the microcomposite volume point of control. Now, all this terminology and what this all means is available in the Bookmap Discord Trader Lab community. If you're in YouTube and you're going to find this interesting, which I hope you do, you can visit. And there's a link in the bottom of YouTube, and you can visit the Bookmap Discord Trader Lab community. This is a high volume area in the intermediate time frame. In other words, we fell out of a consolidation yesterday and this morning. And I'm going to explain what this all means. This is the highest volume. If you think of how the market works, it is based on market mechanics, volume. The volume profile, and while it's important, it's a shopping experience. And I like to think of this because while we can make something that really is not complicated, we can make it complicated thinking that it needs to be complicated and that somehow we're going to find what they call the needle in the financial haystack. In other words, the secret sauce that nobody else has seen over all the years we've had technical analysis. The fact of the matter is, just because your software toolbox has 150 indicators, it's not about you going on an excursion across indicator world to find the right mix of indicators and timeframes. In my opinion, it has nothing to do with this business. That is a piece of software. And sure, at times things work. Throw a dart at the wall. You'll hit the wall sometimes, even if you're blindfolded. That doesn't mean that that's a consistent process that you can literally take to the bank. The business of trading is not built on your indicators. Indicators can have a place, but they are not the end. They're the output of the beginning. And the beginning is built on participant behavior, and it's represented by valuations that are, if you accept this, based on volume. The analogy is shopping. When you go to the store, if a price is too high, you will not pay it. If a price gets too low, and it's on sale, you'll throw more in the cart. And typically what happens is the price then goes to retail, and retail is the fair price or where the high volume takes place whenever you buy a product. Now, the thing about our business and our market is that it is continually auctioning for what's too high and what's too low, and it does it all fractals and time frames. The current market that we are in, and this is not a recommendation, I just want you to know, and this is all in the Trader Lab, this is the target for the day. Doesn't mean it'll ever get there, might go through, not important. What is important is to understand why. If you could understand why, in my opinion, and based on what we do in the Trader Lab community, you will have an edge over other traders who are struggling with indicators, curve fitting, and trying to get that big move, that random behavior, and get it to happen again. I call that Trader Groundhog Day because you keep waking up in the same place trying to fix a process that is random but does not have a statistical edge. Now, it's a personal opinion. I'm not saying it's right for you. There's always exceptions. But the thing about this business is if you approach it like a business, then you accept that it's random, you cannot predict anything, and then it's only about statistics, probabilities. It's gaming. Think how the casinos work. That's our business. They only play games that have an edge. They don't make them up. They're not emotional. They don't change the games because of what happened in the last hand. They're not in the past. They are always in the present, playing the game with anchored inputs, not variable inputs. The market is variable. We need to be anchored. Just an opinion, but you think about your experience. Now, let's go into the open. Now, what do we know? Big sell-off yesterday, potentially geopolitical, pick one, whatever. Doesn't matter. What did we do yesterday? We took a peek by 2 ticks under the consolidation low, yesterday's low, and then we had short covering. What does that set up for today? Well, let's use some common sense. Common sense. Yesterday's low. Was yesterday's low a secure low, or did we just run out of sellers and then get short covering? Can you tell the difference? Now, nobody can predict what's going to happen, but I will say experience will suggest what might happen. And what might happen is if the participants perceive that any rotation is an opportunity to sell, what might we anticipate this morning? Maybe, and that's all you got in trading, maybe, and write this down, maybe we will test yesterday's low. Why? Because sellers who did not get out yesterday or who think we're going to have a continuation trade are going to potentially sell it. Now, our first trades in Trader Lab were shorts. Why would we do that? Because that's our trade plan. What else might we do? Now, write this down, and I say this so many times, and there's a reason I repeat everything. Write this down. The market goes up to go down. The market goes down to go up. What happened the day before yesterday? The day before yesterday, we were up near the all-time highs. What happened yesterday? We blew out all the longs. The market goes up to go down. Now, the market went down yesterday. What do we do today? Potentially go down. And then if the market goes down, what does it do? Potentially goes up. That's the rotational aspect. So even though we can get directional movement and outsized movements, the market tends to feed on the opposite side. So in other words, market was long on Monday, sell stops under the market. Market gets short yesterday, buy stops above the market when we close inside the range. That's some of the buyers, short covering. Then today, sellers. And we take out yesterday's low. What does that bring in? More sellers. And then what's above us? Buy stops. What does that do? Brings us potentially back up to the fair price, which is there. Let me get this out of here. That's stale. Whoop, you got to go. I hope that makes sense. Now let's get into the trades. This is before the market opens. This is what we do in Trader Lab. Now here's what we know. Settlement is here. This is called the naked volume point of control. It is the highest volume or retail price from yesterday. We open below it. So and there's more. And the possibilities are, hold on, let me give you a little more. This is the ETH volume point of control. Volume points of control in all fractals and time frames are like a retail price in the store. In the last auction, the ETH, this is the fair price. In yesterday's RTH, this is the fair price. And then, of course, the 78 up above, that is the fair price in a higher time frame. Now, this is going to sound very confusing. I get it. Come to Trader Lab, you can get it. In the meantime, have a little faith. So, RTH open, if this is a fair price in the ETH, think about it, and it's too high, what might we do? Well, I'm not paying that, say the shoppers, who are traders, by the way. What do we know? The ETH low is here. That has a high probability. ETH high is all the way up here. Well, if we open and this is too high, then this. If we open and this is too low, then that and that, okay, or this settlement. So we could have open, squeeze, down, or just open, too high, down. Either way, looking south of the border unless we can clear these levels, okay? So that's the start. Now there's more. Yesterday's low, remember that's a target, right? And then selling underneath, breakout traders, continuation sellers to then become the buyers. So this is all before it opens. And now it's not predictive. What it is anticipating potential behavior. That's what a trade plan is. So you're in Trader Lab, you already know what you're going to do. You don't know if you're going to do it, where you're going to do it. Except if you recognize behavior, we have something called structured trades. You'd be waiting for the trade. So here's the first trade. I'm going to go over structured trades. I'm not talking about all the trades I take. I'm talking about what you can learn in the Trader Lab. Now, when I say learn, it's not plug and play. You actually have to learn how the business works and how the market works. That's something we typically don't do because we are letting the indicators, time frames, curve fitting, supposedly translate this behavior. And sure, at times, looking back, it does. In trading, you got to be in real time. You got to be here now for timely execution. That's why I don't use any indicators. I use order flow with a high tier tool like Bookmap so I can read the behavior here. And then I have structured trades based on volume and participant behavior. I'm going to show you the first trade. Now, there's two short setups that are coming. This is the short I took coming out of the chute. And I consider it aggressive, because it could give you one of these and then stop you out. I hope you're okay with taking stops. If you're not the business for you, because the casinos pay the gamblers. They seem to do okay with that. So I look at stops, if I'm following a plan that has an edge, is overhead and cost of production. How do you take it? Do you experience it like a personal failure or the need to be right and predict and get approval? That's human nature, by the way. We all feel it, but that's not what our business is about. Our business is managing our emotions and just taking the trades. So what's my trade? Open, test, overnight volume point of control. It's a high probability. I'm not going to share statistics. We have tons of statistics. They're available, again, at no cost in the Bookmap Discord Trader Lab community, as well as 60 PDFs of these trades you're going to see and a library of webinars. So now right here, I see a buyer. I am clueless. By the way, I use the term clueless, not ignorant, clueless. In other words, no prediction. It's always maybe. So I see this. I see this yellow line represents where the highest volume is. Now, if you look at the clock, we're not even in 1 second. Okay? I can't do anything with this. I'm lucky I can even see it. So I see the buyer here. This is developing volume point of control. This starts at 0 at 8:30 Central Time. That's RTH open for me. And this all starts, this is the volume for the session. This is the volume that's on the chart only. You can ignore this over here. This is the ETH. So this is what I got. That's all I got. Now, microstructure. High volume is there. This is a consolidation in micro. Now, and I call these fractals. Now, this is not actionable. When I break here, and now the volume point of control is here, and I test it, this sets up the short. So for me, the short was here. Stop is up here. Willing to take a stop. Why? If I'm not willing to take a stop, how can I get the opportunity? Let's watch. Now, volume point of control shifts here. I'm going to start with this process so you can see. Watch. And if you have questions, post. I can't see them while I'm doing this, but I got to get going here so you could see this process. How do you narrate the market? So too high, that's a variable high volume node. I made these terms up when I came up with this. When I started doing this, didn't exist. And I kept getting run over like everybody else, and I was trying to figure out, well, what's going on here? And you know, it takes years to figure out what's going on, unfortunately. This right here is too low. Watch the behavior now. So what I'm doing is I'm tracking the distribution of volume. And remember, traders are shoppers. Here's the other piece. It does it in all fractals and time frames. And I don't use time. I use volume because the interaction of participants is not clock-based. Like right here. Are you going to wait 5 minutes? What are you doing with that? I can see here. Now, I don't know if this is coming up here. I see my buyer. I know this volume at the moment is too high. If I break lower, these guys were absorbed. This is the order flow. Now, the problem naturally is we see the delta and we don't see the limit orders on the other side. If there's more buyers here than sellers, passive sellers, limit orders, it's like Pac-Man. They're going to consume it. Keep going. If the limit order side, the passive sellers are consuming these buyers, we're going to go the other way. So that's order flow. But you don't know most of the time who's on first. You know, it's like, what's going on? That's clueless until I see the behavior. I'm now below these buyers. The absorbers or sellers were here. This is buy stops, by the way. I'm going to show you to stop an iceberg detector also. So this shows me there's not much going on here. Buyers are here. VPOC migration. Is this too high or too low? Do I cross above it? No, it's too high. How do I know? Sellers were here because the buyers were absorbed. Buyers are here. Are we going up? No. Sellers are here. They are absorbed. The retail price or high volume is migrating lower. I call this VPOC migration. It's a structured trade. I break low. Buyers are here and buyers are there. Now, if these guys, if we get above these buyers, then where were the sellers active? Here. This is resistance. This is support. Now, I don't know it's support. If right here, if it broke down, then they were absorbed. I get a counter rotation. VWAP in mid. What do I know about this? It's too high. Let's look. Notice the test. I'm not paying that. Why? Sellers took over here. Buyers were here. They were absorbed. This is now the retail price because of the volume. I break down. Now I have my buyers here. Here they are. Let's go. Charge. Where do we come? Here. And why? They were absorbed and the sellers took over here. This is another short in the Trader Lab. Short, 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 short. Where are we going? You say. Let's look. here, and under there. Those are the targets on the shorts. Now we're going to talk a little more. I'm going to try to speed along here. So this is the first Trader Lab short. Hope you're okay with that. Now, watch. This is called VPOC migration. It is possible. There's two possibilities here. Let me tell you what they are. We're in a directional market. We have our ETH low, and the coup de grace for me is because, remember the top of the stream, we only two ticked the swing low yesterday. And why did the market go up yesterday? Short covering. Not, well, maybe buyers, who knows. But in, at least from my experience, and this is kind of where almost 45 years of trading comes into play, this is on the hit parade. Doesn't mean it will. It's only maybe. Now, here's an important behavior you need to look at. We come down here, and there's two possibilities. There's always, well, two typically. There could be more, but basically two. I'm still sitting in along here. Come on. Let's go. It's growing moss. Sorry about that. You get kind of twitchy when you're sitting in a position. So, market comes here. There's two possibilities. Continuation down, or if we come across, it changes the context. So let's look at the term context. What's context? Trend down. Okay, we agree. But when it comes across, is the trend down? Yes, it is. But what else is it? Inside of a downtrend, we can change from directional to rotational. They are different. So in the Trader Lab, we have plans inside of plans. Now, it doesn't have to be complicated. It's actually not complicated. The complexity is the randomness of the rotations. That's what'll get you. Not having a trade plan. The outcome is always random. So now we have structured trade. Let me tell you what this is. If we come across, this sets up a different plan inside a plan. Shorts only because of statistics and yesterday's low and everything else I already told you. But this is called mean reversion. Mean reversion is outside in trading. So crossing above here means potential to take shorts out here somewhere, and we don't know where that is. That's part of the joy. To come back to here, and down. So let's watch. So now let's look for another trade. Let's look. Now, I'm going to take you into the subatomic level. What I do, and I'm not spending a lot of time today, they're in all my streams every day, is something called microstructure. This is what trading in fractals is about. Now, I'm going to go back, and I'm going to show you how this works in the micro. Sellers are here. Shorts are in control here. I got sellers here, sellers here. Why are there sellers here? Because it didn't go up. I know. Pretty deep, isn't it? Sellers are here. Sellers are under here. Sellers are up here. So as I'm coming up, this is my resistance. But where were my sellers? Here, there. Limit order book. Break low. So what does this create right here? High volume. This is now, and there's another piece here. Let me just throw this in here, just so you can get a little idea of structure. I don't do this when I'm trading. Obviously, I can't because of time. But my eye is trained to look at what is this. And you guys know what this is. It's a consolidation. Auctions are consolidations in all time frames and fractals. So too low, buyers are here. You see them? Too high, sellers are here. How do I know a seller's there? Because we didn't go up. Passive. What's down here? Buyers. Why are there buyers here? Because we didn't break down. Where's the high volume? In here. There. I break low. I'm now overtaking these buyers. My sellers are up here. So what? So right here, this outside edge, or here, subject to, is our potential shorts. Now, this, I have a seller here. I've got a buyer here. My sellers again are here, and I see I have sellers here. Why do I know there's a seller there? Where's my buyer? My buyers got stuffed over here. They got stuffed over there. I got a selling iceberg. I have the passive sellers here. I got passive here. I got passive here. I got passive here. And this is my high volume. If I take a short in here, this is not necessarily a structured trade. This is a little more advanced and nuanced. My stop's got to be up here because the passive side is here. So if I'm taking shorts in here, the best place to take it would be here because the stop would be very tight. But if you have a plan for this, notice the buyers here. Let's take this in a piece. Sellers, sellers, of course, seller, buyers, sellers, break, buyer here, break low, absorption. Let's look at this structure. Where do we come back to? Micro, right here. This is advanced, not something you guys ought to be thinking about, but you'll understand this is why did we come here? Because there were sellers here. There were sellers there. We had a buyer here. That's delta. Sorry, Charlie. Break low, too high, test, potential short, stop here, or stop here. All up to you. And why are we doing this? Because this is our target. You see what I'm saying? So I'm just showing you structure. Now, let's keep going. If we come across, then I have what? Buyers, too high. Microstructure. What do I have here? Microstructure. You can see the high volume over to the right where this is. High volume. I'm not paying that. Break. What's this? Microstructure. Let's just plot these structures so we can read them together. Now, so all of these are high volume, break. Volume, see how they are? Break. Volume, break. Volume, break. Volume, break. Volume, break. Now, higher time frame volume, developing volume point of control, break. Now we're where we were, and all this is watch. Where do I come? Now, we have a structured trade in the Trader Lab called VWAP to VPOC. This is a structured trade and mid. If we come out here, this is a structured trade. What is this? Too high. So this is a sweet spot to trade, and the target is back to here. It's called VWAP to VPOC structured trade. If you understand fractal trading, which is more advanced, then you can come out here. So let's look at a short trigger. Chop, chop, chop. What's going on here? You see any buyers? I don't. What's going on here? Buyers are here. Sellers are here. I break. What is this? Now, this is advanced, but I want you to see this. Break low. Trigger. Now, I can get stopped out. I hope you know I take stops with everybody else. Nobody does not take stops. If you want to avoid stops, you're in the wrong business. This is a structured, aggressive trade. Watch it. It gives us a trigger. It pulls back, and it would be a stop. Okay? I'm telling you. Watch. Now, the location for the trade is VWAP in mid. The structured trade. Let's see it. Here's your high volume structure. It's in alignment with this, and this is the structured trade. Remember, I said this is a short. If you're trading in the middle of traffic, it's fine. It comes back here. You take a stop. Here's the location. You put it back on. This is a short, and you are going here. The scale can be here or here, right? Here, variable high volume node. Let's watch this. This is a structured trade. The other ones are advanced, not structured. I'm making a point of sharing what you can do. This is an advanced trade. If I take this trade, I take a stop, and then I get this. I put the trade back on, and I do this. I took these trades. I took this one, and this is not structured. This is, something else. But this is a structured trade. But there. So short there. So for me, it doesn't matter what I do. Believe me. What I do is not exactly what Trader Lab trading is. I do derivatives. So I'm just telling you, I took this one. But I want you to see structure, why I would take it. Okay? So here to here to here, My stop is there. So yeah, 2 points. I'll handle it. Here, structured trade. Let's look. Buyers, exhaustion, passive side. What else do I know? I know my sellers were over here. So I'm also looking to the left. So I'm at a location and I get my structure. I have nothing here. My buyers are here. I break low. What's going on here? Nothing. What does it mean? The passive side that was here is now here. It's a suspect. When I break low and I'm below the buyers over here, it's a trigger in the Trader Lab. It's a short and you're going south. Okay? Notice where we come. Trigger, pull back to the volume. So this is resistance, trigger, short to here. And that's the scale. Watch. So this trade, I was on this, I took my scale. Now, here. Now, what I haven't told you is this is an ad for me. This is an ad for me. Because remember we had the short up top. That trade's still on. This is my high probability target, and yesterday's low is kind of the bonus round. Because that's typical behavior. So short, scale, hold. Now, watch. Variable high volume node. Where do we come? Back here. What is that? Where's the stops? Here. What is this? Another short in the Trader Lab. Now, if you took this one, you wouldn't be stopped out because your stop should be here subject to your plan. This is your scale. If I'm scaled, my stop is back here and I'm just twiddling my thumbs going, don't stop me out. You ever talk to the market? What is this? This is the same setup as this over here. I should say is this. This is another short if it's in your plan. Watch. Location. Buyers going to the moon. Selling icebergs. Absorption. Don't know. Sellers below. This is resistance. Micro high volume structure. Break. That's a trigger. Test. Right here. Short. Trader Lab. Why? Going for this. Add. Scale. All stops are up here. Yesterday's low. Next target. And now trailing and going to unknown. This is another level out here. Let's see what happens down here. This is the actual low of the day at the moment, and there's no way to know. Once I'm below yesterday's low, now this is just me, not saying it's a good plan, it's just because I don't know anything. I mean, I don't know anything anyway, but and the thing about when I say that is, I know the possibilities and I have a trade plan. That's what I know. What is going to happen, I never know. That is our challenge because uncertainty is not aligned with the human condition. So this is too high. Volume is here, trigger, boom. I use fractals for trade management at different times. So let's watch. Break, test. I'm not paying that. Boom. What's this? Too high. What do we do over here? Watch the fractal. Oop, get over here. The little high volume. I'm using the structures. Break, test, too high. Where's the volume now? It's here. There it is. This is how I look at it. There it is. There it is. Those nodes, that's like an auction. Oh, I'm not paying that. I'm leaving. What do we think of this? No, too high. What about this one? Too high. Down, down, down. Where's it going to stop? Nobody knows. What's this? Volume. What happened here? Buyers got stuffed. Too high. Sellers in control. High volume is there. Resistance. Now what? Going to zero, right? Sure. Sellers here. I get a buyer here. Now I know this is resistance, right? Because the sellers are over here. Buyers are here. Buyers are here. Buyers are here. Sellers are below this buyer going to zero. Buyers come here looking for it. These sellers here. what happens? Buyers are here. We're now above these sellers. That is absorption. Still no clue. Watch. Sellers are here. 1 second. I'm going to show you the longs. We're getting those. Now, right here, there's no way to know. For me, maybe you know, I don't know. Now we get VPOC migration. This suggests we're going to zero, right? Watch. Now, I just follow a plan. I have no clue where anything will happen. And I can't predict anything. I do understand how the market works, and I know this was a good target. You could be done with this trade here and never look at it again for a short. Or, subject to the number of contracts, and this is all plan specific, once you come out yesterday's low, you're kind of in Twinkie land. So then it's just trade management, and you get taken out wherever you do. Now, this is a big deal right here. This is now the retail price. It's the highest volume so far for the day. I see we're still sitting on our long here. Wow. By the way, the target, not a recommendation, is about 77 half, 77 quarter, 78. If we ever get there, who knows? I forget that I even have a position on here. So this right here, when we come across, it's a change. It sets up something called mean reversion. Now, mean reversion would be outside in continuation shorts. However, look at the buying. And we're inside yesterday's range. This is a reversal. Now, there's no way to know until you see this. And what you see is buy stops, buy stops, buy stops, buy stops, stopateria. And it's a rapid, impulsive move. Look at this thing. It's a bullet. Now, so once this happens, there's no more shorts. Now I'm going, I got to get long. Now I get inside yesterday's range. Now for me, getting long in a move like this is difficult. Now, before I go on with the long trades, I'm going to come up for air. Thanks for your patience. I'm now going to look at questions if you have them. Thanks for visiting the Trader Lab, guys. Hope you're getting something from this. This is the Trader Lab, and this is about understanding market mechanics, using structured trades to attempt at times to get in alignment with the dominant side of the market, and using structured trades to actually develop a plan that has a statistical edge. This is a business of statistics. Nobody can predict anything. By the way, we do predict at times, and we get it right, which is really a path, in my opinion, to being on your way out of the business. There's a random component to this that keeps us trying to curve fit because everything works at times. Like I say, throw a dart at the wall, you're going to hit it sometimes. And then are you going to build a business around throwing darts at a wall? Think about pin the tail on the donkey. You do get the donkey sometimes. When's the last time you tried that? I prefer spin the bottle myself. Shall we continue? This was too high last time we were up here. This now is too low, and here's a bullet train. I cannot get on this until this. And this might come into play. So I've got, by the way, I got to label this. Hold on a second. Got to move this. Well, let's just look at this behavior. This was too high. Isn't there something in trading we call support and resistance? Now, I know you guys look at support and resistance probably very differently than me. I look at volume as support and resistance, and this is shopping. So if the shoppers thought this price was too high, it is resistance, right? Down here, this price, remember the short to here, was too low, gave us the bounce. We came back here, the price was too high, and we broke below it. So this is resistance. Well, if I come above here and I come above here. So resistance, resistance. Isn't there a saying in our world of trading that resistance becomes support and support becomes resistance? Well, if this is resistance and that's resistance and I break above it, how am I going to get long? I'm going to try to get long here against this or this. So you see the absorption here? I got long here. Now, this is a structured trade and it's a bit advanced. And where am I trying to go with all this, you're saying? I'm trying to go here because this was yesterday's retail price. In the developing time frame, this was a retail price that was too high. Well, yesterday, this was the fair price. If what's below us is too low, is it logical we'll come back and check this? And since the market's short and settlement, then where are we potentially going? Here. Same thing, higher time frame. So that's the whole genesis of this thing. So this was a long for me. Now we have other structured trades in here. And I'm still sitting in my last runner, getting old, but you just got to follow your plan. Now there's more here. Let me see if I can find the location. Where is oh, here. Okay. So this has over a 90% probability of being taken out. Past performance not indicative of future result. This is in the stat sheet. And it's actually almost a 98% probability. Now, why would I say that? It's not that one. It's the first hour's high or low. Well, given that we already got all the shorts in here from this morning and from yesterday, and we left the low of the day and we're inside yesterday's range and we had aggressive buying off the low of the day, I'm going for this one. What about you? So if I know there's a 98% probability of this getting taken out based on the structure and the context, would it make sense to you that maybe I get long to go for this and this? And that. You see, that's trade plan. That's Trader Lab. So that's, that's one of the trades. So right there, so that puts your long in play here. So I got this one and it's against this. Now, and why? I come down and I know this, remember, what's too high. Resistance becomes support. The volume point of control shifts here. Now, this is the new retail price. This now is too low. I come back and my teeth chatter just like yours. And I pull outside. Now, using order flow, let's put pieces together. I see, this is the absorption detector. I see absorption. All right, that's nice. I'm at a location. You guys have heard the term in real estate, location, location, location. Yes, location. And yes, you can take a stop. Let's get over it. It's overhead and cost of production. I understand we're all wounded, like it's a personal failure. It is not. It is just one trade. Icebergs going off here. Absorption, absorption. This right here is a long for me. Now, watch. I get risk neutral, and I'm holding. Where am I trying to go? Here for a scale. And 98% probability. So, so let's watch. Doesn't get here, pulls back. Let's watch. This is a high volume node of this. This is the same as these white lines, but I'm in a slightly higher time frame. I say it's fractal trading, So I got nothing to do here. I'm already long from here. But let's watch. And I have this. Another target here. Now there's more trades. I got to get through all this and then I'll look at your questions. Sorry, guys. So we have that IB. right? And that comes in at 9:30 Central Time, the first hour. Where is it? It's there. Now it's not, it's the first hour's high. So whatever the high is, which is there, whatever that is, there's over 98% probability we're going to take it out. Okay? So I just hang out. I go, all right. VPOC migration. Too low retail price. Now, let's follow the yellow brick road. Now, there's another structured trade in TraderLab. At 9:30, there's a couple things you can do here. IB high, pull back here. So we one ticket or something. We had an interesting conversation in TraderLab. We have a structured trade in TraderLab called the IBF. I made these terms up because when I started doing this, nobody was doing it, at least that I was aware of. So like IB failure. And the IBF is a counter trend mean reversion trade. It's a short back to the VPOC. Okay. However, what are we doing? We're going up. What's the condition of the market? Short. Shorts are in the market. There's fuel. So I can't take a short. I'm looking for continuation longs. So I'm just telling you this is what I'm doing. Here's my fractal, and I'm now getting into something advanced. This is a potential short, not a short. It is a potential counter rotation for me to look to get an add for a long. So when this came under here, and this is not necessarily TraderLab-ish, I will show you the TraderLab trade. Let me come back to that. So we break here. Let's assume nothing. The TraderLab trade is called the IB continuation trade. So you've got a potential mean reversion trade, which is not qualified. And then if you break high over the IB here and here, you can get long for what's called the IB continuation trade. So this is a long in here, and you're looking to get risk neutral, which is what you would do. Your stop will go under here, and you're going for the upside target, which is this. So that's a long. Now, what would happen here is you'd be scaled, and because you have to have a minimum two lot configuration, you come back under here, your stop would be here, and you would, and here's VPOC migration. What you want to see here is the continuation up to this. You see the behavior. Just watch. Now you have the VPOC migration. Now, subject to your plan, if you have a viable target here, and this is plan specific. Now, for me, the long, is off of this. This continuation trade, scale, hold, VPOC migration. If we can hold this north, so that's it. And we're going for this. That's c'est la guerre. So you're holding, not a recommendation. Your stop is under here. Now, here's what can happen. And I'll already tell you the next trades in TraderLab, not recommendation. You're holding the long and you're sitting here working on your crochet. If we come under here, we're going to come here and maybe come out here. If we come out here, subject to the behavior, we might just take the stops under this. It would be a mean reversion trade to come back here and continue up, or at least test that high volume. So right now the trade is a long. It's an open trade subject to your plan. Or, let me give you the or. This is really individual specific. You are managing your trade using the fractals. This is high volume in a fractal. This is your retail price, and in this time frame, it's too high. It is now resistance. This is the outside edge here, and there's stops under here. The buyers were here. The buyers were here. The buyers were here. The buyers are here. The buyers are here. The buyers were here. We can come out, and if the buyers thought this was a great price, they might be activated again. If we're under these buyers, then there's trouble in River City. The next location where the buyers were active is here. If we keep coming down, the high volume is here. So I know anything can happen. I got my VWAP and my bid mid. So we can come out here. So I don't know what it's going to do. So if I'm holding a position for a higher time frame target, I am not going to micromanage unless it's in my plan. What I would do, now I can't talk so much about what I would do because what I do is not, it's time frame specific. We have traders in Trader Lab. We kind of joke there's one trader in Trader Lab. His name is Rod. And kind of fun. I always refer to him because he puts a trade on. He'll have his stop way outside. He'll go to the gym, take a nap, maybe go to lunch with his friends. Or lately, Rod sits in a Barca lounger, and he'll sit back and let the market rotate because his time frame is higher. Now, Rod can let us know what he's actually doing here, and it's just an example. My time frame might be get out here because this was the last place the buyers were. Another trader, anybody, might have their stops out here someplace and just sit through this noise and have the risk of giving all the open trade equity back. Now, for me, I would sit up, I would lose sleep over that. So I might manage, but still give up some MFE. But my plan also says, where's my next trade? Well, first of all, we got to look at where the stops are. They're here. 1 second here. Let's watch. Microstructure is here. I'm just going to take it from the other side. The consolidation. You can see the volume. You see this? This is a consolidation. This is your outside edge. So when you're looking at this volume here, just give it some shape so you can kind of see what it looks like. You see where the low volume node is on the right? Yeah, there. So this is your consolidation. This is what it looks like in volume. So when I'm doing this, basically what I have is sellers here, buyers here. You could see we had sellers here and the market went up. So I know there's absorption there. And that is also showing me that we had buyers, the sellers were here, they got absorbed. You have a seller there, and the absorption here is showing me that these sellers here were absorbed by the buyers. That's what gives you this. Now, where it's up on top, the sellers are here, and these buyers got absorbed by the sellers. So I'm looking at it from both sides. What happens here? The buyers are here, and the sellers are here. The sellers were there. So I break low. This tells me this is too high at the moment. Now I have to come back here. I look at the next layer, which is this, right at the IB. We're going to throw a little line over here because it's the high volume. So I have consolidation, too high. I'm now sitting over in this thing. Where's my next high volume? It's here. If I break out under this level, then my next high volume is here at VPOC. You see how it works? So I can sequentially go down in the fractals, and that's what I call these. In fact, I'm going to draw another one, and I'm just going to move it a little over to the left so you can see the differential. Now I'm going into something that's a bit more advanced, but you can learn this if you're interested in it in Trader Lab. And it's not a 15-minute experience. You got to actually learn how to understand how the market works. That is support. That is resistance. Is this making sense, guys? Give me a yes, no, maybe. Ask a question. How are we doing in YouTube? Please give me the like button, the thumb up. My wife says to me, it's thumbs up, not thumb up. Well, one thumb up is great. And visit the Trader Lab. This community, this education is available to all of you at no cost. It may not stay that way. The Trader Lab is definitely not going to be here indefinitely. I am not a vendor. This is a community of traders that have come together to leverage their collective experience. Being able to take these pieces, derive statistics, takes a community effort where we support each other to get better. By the way, what is this? Not only is it support, what else is it in the Trader Lab? Guys, what is this structured trade in the Trader Lab? Anybody? The IB continuation trade. This is a structured trade. If you're in the Trader Lab, where are your trades? Here, the IB continuation trade. And if we took this IB out, down here, back to here, back to here. If you're in Trader Lab, you already know this. What you don't know is the same thing everybody else doesn't know. What's it going to do? I don't know. So how do I trade this? Well, the trend at the moment is up. Shorts are still in the market from yesterday, and the highest time frame at the moment, retail price, is this. These are all fractals. Yesterday's RTH, this was the retail price in its time frame as you think of them. I don't use time. Remember, it's not time-based. This is volume-based. This is what volume profile is. Volume profile, I mean, we could use anything you want. But the thing about it is, where is the truth of the market? It is ultimately based on the buyers and sellers or participant behavior. How do we gauge participant behavior? The auction. This is an auction. It is represented by this. That's what creates. I'm not paying that. Yeah, but it's on sale. Throw it in the shopping cart. Where's the high volume? It's there. That's the shoppers going, okay, retail. Now, if this becomes too high, which is there, this is resistance, this is support. And I can, go anywhere with this. But as I go through levels, I can look at them and go, okay, if I come here and I see my buyers and I hold support, and this happens to be a structured trade, it's an add or a long, and your target is to scale before the high, or even this. If you can trade in this, it's subject to your plan. There's a nice range here to get risk neutral, and you're still going for this thing. And then if we take it out, trade management. Because we got more. We got more. I don't know. To me, I don't care about yesterday's high. What happens for me is I trade volume. So this is my target-ish. It's an area. It's not a wall. So as I come up here, I'm looking for this, and that's where if I got long over here on this IBC, continuation trade, I scale here because that's where the sellers took over and it was too high, and then I hold. And whatever. Or how's this? Are you a scalper? I'm not, by the way. I been there, done that. Not worth my brain damage. If I get long here, I could just trade to there and be done with it because I understand how the market works. But for me, if I get long here, I scale. So if I was if I was a scalper, I'd be done here. If I'm going for this target, which is still viable, I scale here. Same process, except I'm adding pieces. Because for me, job number one, if I know this was too high based on the selling up here and the absorption, then I know if this price was too high, that it's resistance. And I know this is support. So if I get long, I got it right. Resistance, scale. Notice my sellers are coming back in here. Here's what can happen. If I can rotate back down again. If it comes over here, I'm going to get taken out of the trade. And I'll scratch the trade. Actually, it'd be better than scratch the trade. I'd make some burgers and maybe a large fry because this is resistance. And there's my seller. For me to go higher, I got to get through these sellers, icebergs, you see? So now I'm narrating the market because I know not what will happen. I understand order flow. I understand why we had this rotation was because the sellers, and this was too high. Is it logical to you that if I got long here in a structured trade that I would scale here? Is it logical to you that if I can't squeeze these guys out, that then I can come back under here and my stop after my scale would be here? Is it logical to you that my next trade, which I've already discussed, is back under here if I get taken out? And then I'll be looking for something called mean reversion. That's all I got for you so far. How we doing in YouTube? You know, it's important, guys. These are structured trades, but here's the other part of a structured trade. This. If you understand order flow and structure, you know, if you're in Trader Lab, you know what that is. That's why I marked it for you. Did I know this was going to stop here? Nope. So what do I know? I know it was too high. That I know. And what else do I know? I know this was too low. And it's a structured trade. It's the IB continuation trade. It's in the Trader Lab, in those 60 PDFs and in the library of webinars. No secrets. What is the variable? The behavior of the participants. My job as a trader is just to take the trades when they meet the qualifications or the conditions. Also, if I understand how the market works, which many traders, I will even say most traders, never develop an understanding of how the market works because they think the market works based on their indicators. That is not how the market works. Indicators are Google Translate in hindsight. And when you have multiple indicators, you get noise, inconsistency. Is this consistent? It is random. You get randomness too with your indicators. But I have something a little different. I have what's happening right here, right now, and what happened right here, right now. Not an indicator telling me to get long here or to get short here. For me, it's get long here, get scaled there. And then and I know, what do I know? Order flow is telling me sellers, the volume is here, sellers in control, buyers are here, sellers are here. Why did I scale there? Sellers, and high volume, shopping. I'm not paying that. That's why this. Why did we get long here? Oh, it's too low. Battle of the bands. Bingo, bango. Support, resistance. Can you think like this? The reason I do what I do, and I don't use any indicators, here's what this is. This is language. Have you guys ever studied or learned a foreign language? This is foreign, of course. Have you ever tried to learn a musical instrument? What is this? It's music. It's language. I'm not using a translator, so I don't use indicators. I need to be here. I do that with order flow and an understanding of how the market works. Remember, we're not in the business of prediction. We're in the business of alignment. Can you get aligned if you understand market mechanics, where the resistance is, where the support is? And yeah, it's still random because nobody knows anyway. What might give you an edge? Can you build a business on edge like the casinos do and accept, like the casinos, that the cards coming out of the deck are random and how the players play the cards is random? They have no control over any of that. They only have control over what they do. And what they do is only play games that have an edge. They don't change the games. They don't make them up. There's no such thing as curve fitting in the casinos. They just deal the cards. If the gambler walks out with a suitcase of cash, they play the next hand exactly the same way. What do we do emotionally? If I take a stop on my last trade, the next trade I'm going to hesitate. I might not put it on. I don't want to take another loss. I am trading the last trade. I'm not trading the present opportunity and risk. Does that make sense? That's human nature. That will take you out of the business. We have to rewire ourselves for this business. Casinos don't change the game based on the last hand. They just play the game because statistically, the only way they extract dollars from the other participants is by consistently playing a statistical edge with a random distribution of outcomes. That's what the Trader Lab is built on. Business, career building, not fantasy and not a video game. Now, what you do, if it works for you, come to Trader Lab. That's what it's for. It's a group of like-minded traders that have come together to leverage their collective experience. There's no cost. There's a link in the bottom of YouTube. You can access the Trader Lab community. And the most important thing of Trader Lab is other traders who have done what you've done and have determined that waking up in the same place with the same outcome, no matter how motivated and persistent they were or are, and that keeps waking up with the same outcome, might have to do with the belief that what they're doing is correct. How about if what you believe to be true is not in alignment with this business? Have you thought of that? If it's not in alignment, you're going to, and I coined a phrase called Trader Groundhog Day, you're going to keep waking up in the same place, and it doesn't matter how hard you try. I spent years doing that, and I kept doing different things, fibs, Elliott wave, trading systems. I mean, I could go on for an hour easily on all the things and derivatives I have done. And because I thought it was just finding the right mix, you know? And the problem was they would work until they didn't. So when I built systems, what I did is, and back when I was building trading systems early in 1980s, because I started in 1980, technical indicators were a new thing. I shared an office with George Lane, which, if you don't know me, he actually built stochastics. George Lane, you can look him up, investment educators. I shared an office with him. When I first saw an oscillator, I thought the Holy Grail had shown up, right? And then we had Bollinger Bands, and then RSI, and then eventually but all these things evolved over the years. ADX, DMI, Wells Wilder, big deal, So that was all what I did because, here it is. Spend a number of years doing that, many years doing that in derivatives, and keep waking up at the same place. Trader Groundhog Day. And then with systems, you do walk forward testing. You take a chunk of data in the past, reserve some data, so you could do what's called a walk forward test. So you're always trading something that's a month behind. And the belief, just like you believe, and I believed, was that the market continually repeats itself. Well, yes and no. Yes and no. It continually repeats itself, but it's not the same. It repeats itself in a random way. So when you try to curve fit it, all you're doing is trying to fit the market in a box with the expectation that somehow all you got to do is curve fit some indicators and you have an ATM in the basement. Why do you think the failure for retail traders is so high? They're all doing the same thing. Do you think it works? What's your experience? And I'm not talking about it working at times, because everything works at times. Gamblers walk out with cash, but over time, unless they're very exceptional, and I know we're all special, right? Unless they're very exceptional, they lose. So are we doing what the gamblers do and expecting a different outcome? Or maybe we want to sit on the house side of the table. And to do that, we really have to rewire our beliefs. I mean, it's just the way it is. It's not up to me. I wish I'd done it. I wish there was something like Trader Lab when I started trading. There wasn't. There was no computers. There was no internet. Not a zippo. I did my charts by hand, and that's not because I'm an antique. It's because I wanted to be more in touch. It was like every Monday we would get a chart book, and then every day you would add open, high, low, close. There were no candles. They were bar charts. We didn't have candles yet. Now, that's only to tell you, nothing more than to say, I worked so hard. I committed, this is what I was going to do, no matter what it took. And I suffered the same things you are suffering or have suffered. It's part of a journey. Now, the thing about that journey is, when I started, nobody was trading off floor. All my buddies were floor traders. They thought I was out of my mind. I understand. They are actually correct. I just didn't know it. Now we are in a different world. You guys have all the information at your fingertips. You also have a bunch of nonsense also at your fingertips. And the problem with that is we all have limited resources and limited time. Where's the truth? Well, first of all, you got to find your truth. One of the ways to do that is to look at what you're doing and is it working? Not intermittently, but is it, and based on how much time you've put into this, are you continually doing the same thing, but not getting a different outcome? I remember when I was starting out, I'd see this 20-point rotation in the S&P, and back then I was trading the big S&Ps, not these little mini things. And it was serious money. And I was a swing trader. There was no day trading. It was trend following and swing. I would swing trade these things, the big ones, and that'll eat your stomach lining up. And I kept doing what I believed was right, and it kept breaking down. I would have success. I'd get profits. No, P&L is not the answer, guys. It became statistics. That's why I went to trading systems, so I could get statistics. And all I found was I could curve fit. I could get great statistics. In other words, looking back, but it was called optimization. We didn't use the word curve fitting. We used the word optimization. So when you're curve fitting, you are optimizing, which is curve fitting. So you need to understand what you're doing. The fact that this thing rotated here is not as material as knowing there's stops under here and this is too high. That's material. I don't need an indicator to tell me that this is too high. I know it's too high. Did I know we were not going to go through it? No. What did I know? This is support. This is resistance. That's as deep as it gets. Now, where's the stops? Under here. What's probably going to happen? And probably means probable. We're going to take this out, and come under and take the stops. We've gone into a rotation. That's all this is. Now, will it? I don't know. Sellers are here. The buyers are here. Now, right here, we got to see this absorption is here. If I break low, the stops are sitting here. Possibility is, and I'll even say probability is, we're going to take this swing out, and then I've got to be looking here, and they have the VWAP in the mid. My next trade, not a recommendation, is to get long to come back here and out the top. So if it comes out here, I'm already going to be getting long again. Now, if it falls out the bottom and it's the end of the planet, then, I'll take a stop. If I don't get a buy here, then I don't do anything. So I'm just letting you know. This is resistance. This is support here. Weak structure now, and then down here. Questions? How you guys doing? What subscription to Bookmap lets you plot all the levels? Tiger Williams in YouTube. This is in Bookmap. It's called Cloud Notes. And these levels are generated by my other software. I have what's Investor RT by Linsoft. There's other software packages that can do this, but your software needs to be able to export the data somewhere. And basically, this data is on my internal server being exported, and this is called the Cloud Note. Now, remember, we're looking for stops here. Now, I'm seeing more absorption. Let's watch this here. Buyers are here. Stops are here. Let's watch this very closely. Sell stops are coming out. We anticipate that because of this. This is retail. This is the IB continuation. We want to watch this here. So what I have here is sellers, sell stops. We're going to watch now very closely for potential structured trade. Not a recommendation. I take stops all the time. It's not my favorite thing, but it is what it is. So sellers are here. And what do we know about this? Too high. Now we have resistance. So now what are we going to do? Well, subject to your plan, still look for a long. Where's my stops? out. This is too low, fractal. So it's labeled. I'm going to put a line here just so we don't miss it. But what's below it? The VWAP and the mid. We have a structured trade in TraderLab. Here's what they are. Here to there, out the top. Here to there, out the top. Here to here, to here, to here. So if this happened, this dropped down. So this now is the retail price. It's saying at the moment, this is too high, which we already knew in the fractal. Remember? Let me pull this down just so. Remember, so this was a long, this was a scale, this was resistance. This is a long, this is a scale, this is resistance. I think it was here. I can't remember. This is support. This is resistance. This is support. Stops are under here. Now we're looking for a long somewhere. Not a, remember, I don't call trades. You don't want to take my stops. You don't need me for that, right? We all take stops, by the way. I take them. Why not? There's no holy grail. There's no way to avoid overhead and cost of production if you own a business. This is my business. Do you want to be in business? You got to pay your bills. What is the bill? Stops. So now, too high, retail. So this is now the condition of the market. Trend up at the moment and rotational trading. This is called mean reversion. Structured trade in the TraderLab is outside in trading. Now, the thing about the joy of this whole thing is it here at this outside edge? Is it out here? Subject to your skill, right here, this might be, now this is not a trade, this is not a structured trade. I'm going to just, let me stick to those. Next structured trade is out here. Okay? This is a different animal here. Different animal. Let's watch the behavior, though. Not a trade. It's an animal. Watch the behavior. Sell stops 396. This is when your broker sends you a gift basket. You got your sellers here. You got your sellers there. The buyers are here. These guys were absorbed. If I can clear this, I have the potential to go here. If I can't clear this, then I've got this. Watch. Questions, guys. And by the way, remember, there's a link in the bottom of YouTube if you're interested in visiting TraderLab. This, and by the way, TraderLab is not romper room. It's very serious. These are serious traders. Our senior trader has over 50 years that he admits to. For me, it's 45. Try to remember exactly. It's almost 45 or over 45. I'm not counting anymore. I started in 1980, so whatever the numbers are. I guess that's 84 and change. So notice the behavior. See, this is what you will learn in TraderLab. This is the high volume. Let me throw a little line on here for you so you can kind of follow it easier. So this is too high. There's the sellers. There's the retail price. I break low. This is support. I break below. This is support. High volume is here. This consolidation now is too high. This is the retail price in this consolidation. Too high. I'm now coming down to support. And my next trades are down here. You'll notice I had absorption here. Where's my resistance? It's there and there. Too high. So now it brings me out here. Now I'm going to be shopping. Being the astute shopper that we all are, I'm looking for a sale. Now the market, remember, never has to get to my target. When I say my target, it's not mine, it's the market's target. The market created this. Now, is it too high? Maybe. This is the same as that, except it's higher time frame. As you guys think of time. I don't really think of time. I think of structure. So a little different, but time frame, if you will, or fractal. So what was too low? Out here. What happens at the VWAP in the mid? Stops. So what am I going to look at? Out here, out here. Low volume areas. Remember, what is a low volume area? It's an outside edge. too low, too high, too low, too high. Retail. Oh, too high? I'm out of here. Go to the next store. Too high, too low, too high, too low. Retail. Too expensive? I'm out of here. And we're looking for too low. So too low can be outside edges. And what's over here? The VWAP. So for me, when we come out here, it's very skinny over here. This is an outside edge. So I'm going to be shopping, and this is not a trade recommendation, at an outside edge. And this is called mean reversion. It is specific plan in a plan. So what the market does, it gets directional, and then it changes to rotational. Now, for me, and this could be the high of the planet right here. We may never see this again. It could be the end. I'm saying maybe because I don't know. But in my plan, the trend is up. And if I get a counter rotation, which is normal, I'm looking for a long to rotate back up to there and then potentially out the top at some point to my target. If it doesn't get there, then I've got nothing left to do. Does that make sense? And remember, there's a link in the bottom of YouTube. If you want to visit Trader Lab, there's no cost. And here's another thing. If you're in YouTube and you find this interesting, there's also a link down there for a free version of Bookmap. I don't know why nobody talks about this. I mean, even I wasn't talking about it because I'm not even conscious of it. I don't think about it. But if you go to bookmap.com and you kind of rummage around, you'll see there's different subscription options and advanced add-ons and a lot of tools depending on your subscription that you can make part of it. Like stops and icebergs. All this provides additional insight. There's a free digital version that you can download, and it comes with data. Now, here's the point of this. Sure, you can get your hands on Bookmap, and if you want to get an edge over other traders, you might be able to get that with order flow versus lagging indicators. So I can read this, but let's talk about other things. If you come to the Bookmap Discord Trader Lab community and you have a digital subscription, what that does is there is subscription-specific streams and education. There's the Bookmap Academy where you can get mentoring and coaching. It's all available at no cost, but I'm whispering now. You have to have a subscription. If you get the digital version, you will now be a subscriber, which is free. You do the math. What do you think? That's all I'm going to say about it. You can get that. And then you can participate in the Bookmap Academy for the coaching and mentoring and see what other traders are doing. There isn't one way to trade. But the thing I think about trading is you got to find what works and then get rid of everything that doesn't work and creates conflict. Remember how casinos operate. They don't play blackjack with 7 cards, 10 cards. Maybe we'll do 15 this time, which is what we do with our multiple indicators in randomness. They just do one thing the same way. Why would they do that? How about it works? So what we do in Trader Lab is we're not reinventing the wheel. We're using a proven, successful business model, and then we're taking trades and we're approaching it like a casino would approach its games. Anchored inputs, not variable inputs, and the discipline to play the games that have a statistical edge and not engage in randomness. The outcomes are random, but you need anchoring of your inputs. That's why multiple time frames, multiple indicators, just in my opinion, it's just an opinion and an experience, garbage in, garbage out. You've heard that, right? Have you ever thought about multiple indicators, multiple time frames in creates garbage? How can you quantify that? You can look at a P&L, but is that sustainable? Or are you suffering from Trader Groundhog Day where you keep waking up, working hard, doing the same thing and not getting a different ultimate outcome? That's why I agreed to do Trader Lab. I wish I had information like this when I started. The learning curve for me was beyond horrendous. I ended up having my own firm, being a money manager, managing a substantial portfolio, and it was trend following and swing trading. It was not day trading. We didn't have day trading. So, I mean, we didn't have domes. We didn't have an internet. You know what I'm saying? So we didn't have the technology. So I would pick up a phone and call my guy on the floor. I mean, that was it. You know, that was high tech. So the learning curve was much steeper for me because there was no information. So I kept persisting, but having the same issues, breaking down. Now I do it a bit differently. I don't do what other traders do because I've been there and done that, and I know what my outcome of doing that, even though there you will have winning trades, which is what keeps us trying to fix it, is not, for me, again, I'm only talking about me, was not a successful approach, even though I'd have runs, you know, in other words, runs, you know, where, you know, you make 30%, 40%, 50% over 6-8 weeks. I mean, I've had 70% returns over a couple of weeks and then give it back. So what I'm saying is, if that's normal in a process that's random, everybody has streaks. Gamblers have streaks. Losing gamblers have streaks. That's what keeps them at the table. And that's what keeps the casinos in business. I hope that makes sense. Please give a thumb up in YouTube. Let me show you what these structured trades look at. We are looking for a long here. It's not a trade recommendation, just so you know. And we're also, and by the way, this could be the high of the day or the high of the century. We don't know. I'm still going for this unless the structure falls apart. So far, I still have structured trades lined up for longs to come back here and then potentially out the top. So that would mean a potential long, not a recommendation. I have to stress that because it's not mechanical. That's something else you need to know. Trading is not a mechanical process. It is based on something called context and then structure and alignment. If you don't get in Trader Lab, we have triggers. If you don't get a trigger, you don't have a trade. You may come to a location, but if you don't have a trigger, you just sit and wait for it. If it violates the structure, then you're just working on your crochet. I'm going to show you what these trades look like. There's 60 PDFs of these. You can download them. You can use the link in the bottom of YouTube. Come to the Bookmap Discord Trader Lab community. You do need to confirm your email address and verify, so you'll get access to the Trader Lab and the Discord server. Some of this is research. These were not intended as instructional. I was getting a lot of requests from traders. What are you doing? I go, well, that's what I'm doing. Some of these are screenshots, you know, so I can put narration on here. Others were actual live trades I took. This is like real trades. You can see them. What did I do? Why? And here's some of the explanations. And some of this, I do not. These are indicators down here. I don't use them. I was doing research with Bookmap developers on trying to build some tools for traders that are indicator oriented. It is not easy to let go of what you believe. It's like a security blanket. I understand. So I was trying to help develop tools, which of course I don't use, but trying to help traders do better. Please give a thumb up in YouTube. Subscribe to the channel. Remember, there is a link down there if you want to download the free digital version of Bookmap. Get your hands on it. Also, if that would make you a subscriber, so you can access all the subscriber education. There's no cost for it. Also, you can come to Trader Lab, no cost for that. Please give the thumb up. And this stream is available exclusively to Bookmap Discord Trader Lab participants. I might make it public. I haven't decided. It'll be up to Trader Lab participants if they want this added to the exclusive library. Remember, there's a library, the 60 PDFs of structured trades and statistics, and the Trader Lab community. It's all available to you at no cost if you're in YouTube and you want to check it out. Thanks, guys. Please give that thumb up on the way out in YouTube. Look forward to seeing you guys tomorrow. Trade safe, have a plan, and remember, at the moment, we are still looking for long continuation trades. And of course, it never is a recommendation. Let's see how it plays out for the rest of the day. Take care, guys. Look forward to seeing you soon.